Good afternoon, everyone, and good evening to those listening to us from market. My name is Jemai Mohammed. I'm an investment director in BII's Financial Services Group. I've heard from various discussions already that we know the challenges. It's time to focus on the solutions, and this panel really is touching on investment vehicles designed to achieve those gender equity and climate resilience. And I think really we've heard from Amoli just earlier, who's given a remarkable opening in terms of just where the interconnections are between gender and climate, and how we can take a truly intentional sort of intersectional approach in bringing those two together towards effective investment and sustainable development. So today I'm really quite happy to be joined by quite an esteemed group of panelists, incredible leaders in the room, innovators in the room. We will be hearing from you very shortly on really how you're designing and delivering these investment vehicles towards those dual outcomes, and how you're creating real impact in the communities. I think it's quite impressive also that you cover quite a few geographies across board and sectors as well. So maybe noting that Tammy is online, I really do want to start with you. I will start with a few high-level introductions before we delve right into questions. So Tammy Newmark has joined us. Sorry, Tammy is quite here. Sandrine is online. Sandrine Henton has joined us as the Managing Director of EG Capital, a private equity firm who's investing in mid-sized businesses in food, health, and education across East Africa. Welcome, Sandrine. Just to check that you can hear us fine and your mic is also working.
No, thank you, and good afternoon, everyone, and thank you for having me join remotely. My flight was diverted yesterday to the Qatar airspace closure, so really appreciate the flexibility, and big thank you to Laurie, Leslie, and Sarah, and the team for the kind invitation for this important conversation.
Thank you very much, Sandrine. And with us in the room, we have Nazir Salim, the President and CEO of Habib Bank Limited, the largest private bank in Pakistan with a strong domestic and international presence. And you're operating in quite a few markets through subsidiaries, branches, and representative offices. And we look forward to hearing more about those operations. And Tammy, also with us in the room. Tammy, you're the CEO of Eco Enterprise Fund, an impact investment fund that is supporting nature-based climate businesses across Latin America, and actively incorporating gender lens, I think since launch, really, of your fund. So really interested in that perspective from you. And finally, Ilya Chulvildin, as the head of the Climate Solutions business at Export Trading Group, ETG. ETG is a global agribusiness operating across more than 45 countries, I believe. And ETG, you're both an investee of ourselves, BII and FinDev Canada, much like the rest of our panel. I'm truly excited to get into the questions I have for you. I really do hope that we can have a fruitful discussion around solutions and opportunities across the nexus of gender and climate. So Ilya, if I maybe come to you and kick off with you. So as the lead of the climate solutions business at ETG, could you start us off by walking us through really just how climate solutions are embedded within ETG's broader business model, as well as just how you're also incorporating that into your funding strategies?
Yeah. First of all, it's a pleasure to be here. Thanks a lot for the invitation. So yeah, essentially climate solutions is part of a vertical of ETG, which is ETG Commodities. We started out essentially by saying, look, ETG as a group has access to millions of smallholders, mainly, let's say, East and Southern Africa, but also sort of broadly across the world. But this is where our programs are focusing currently. And what we said is we already provide inputs to smallholder farmers. We procure crops. So we may also be, let's say, correctly placed in order to try and scale some of the interventions related to the carbon markets, right? So what we started doing 4 years ago, essentially, is to try and scale agroforestry models. So we don't just plant trees for the sake of carbon, but we try and essentially provide farmers with trees that will result in a high-value crop afterwards, so that we're not just dependent on the carbon markets. And we also realized that there was a massive demand in the rural areas for things like improved cooking solutions. So that's why we started rolling out essentially these programs as well. So as we currently stand, we are operating in 3 countries as Climate Solutions. We've planted by now more than 30,000 hectares of agroforestry, let's say high-value agroforestry systems across Zambia, Kenya, and Malawi. And we've distributed about 30,000 stalls in the same communities. So our approach is basically, let's say, an entity which is based in Switzerland, which is the investment vehicle that is deploying this capital on behalf of the group currently into these projects. And I would say that it was not necessarily intended since the beginning, but we realized by looking at the data that essentially 55% of our farmers are women, and 90% of our cook stove recipients are women as well. And I must say, by the way, women are much better farmers according to our experience as well. So we're quite happy about that. And so, in a way, whereas our intention was to, let's say, try and scale some of these interventions, we are now addressing, let's say, the particular topic, and we are at the intersection, really, of gender equity and climate resilience, because we are fully cognizant that, of course, as was said previously, climate change is not, gender equal. Let's put it this way.
Thank you very much, Ilya. Really good to get your perspective, just really in terms of how you've seen the data really drive now this nexus that you're seeing across your programming. Nasser, if I could come to you, just BII has recently provided a debt facility to support HBL in also on lending to smallholder farmers particularly and towards climate resilience. Could you maybe just share with the audience here how HBL is creating value for stakeholders across both climate and gender objectives, and how you're really delving into impact from the perspective of reaching the underserved communities like smallholders and the gender aspects as well?
So thank you for that, and I'll try and encapsulate it in 5 minutes. If I get too verbose, so please let me know. But it's been an interesting journey. When I look back, we'll start with the basics. I mean, what do banks do? They extend financing, they recover, they make a margin, that's it. So that's something that we started as the oldest and leading bank in Pakistan. We actually predate Pakistan. So we were one of the first to take a foray into agri. And, I would like to say that was purely banking. We went out to farmers, we extended them credit. We had the comfort that we also had a lot of the buyers of that as our customers, being the largest bank and the leading bank in Pakistan. The next step was we were over a number of period of years, built it up to a book, which is the number 1 in Pakistan, and it just crossed about 110 billion rupees. Now, that has nothing to do with climate change, and that has nothing to do with diversity and inclusion, right? So the next step was when we looked at combined market share of the banking sector in agri, it is actually less than 10%. So 90% is still in the informal market. And what does that do? What it essentially does is that the farmer has to get curb rates. So these are informal lenders they also sort of capitalize for these small farmers. And by the way, in Pakistan, 90% of the farmers are small farmers, less than 12.5 acres, some with less than 1 acre, others that rent the land from other people on contract and then, farm those, as well as livestock. The average livestock is, 1, 2, 3 animals. It's not very organized. But with a population of 250 million, it's a substantial part. So overall, directly, agri is about a quarter of Pakistan's GDP. When you start looking at the industries that are built on top of the agri-produce, the value chain, is estimated at somewhere around 50, 60%, take anybody's guess. And at the base of it, that farmer is still doing archaic farming. They're still using, dirty fuel for tube wells and running tube wells through generators. Flood irrigation is taking place. It is also the largest sector in terms of employment, so about 37% people are employed within the agri sector, many of them females. So this was a challenge where we needed to go deeper. And in that, what we decided to do is, let's become more than a bank, right? Let's start to extend our reach so that we can really, really serve. So we spun out, we did some pilots, which basically put more than 100% return more than what they were previously getting. And it was very simply a function of two elements. One was that their financing cost went down substantially, and it's the same person that financed them that finances their seed, their fertilizer, so gets a commission on top of that. And when the harvest comes in, they don't have the means to take it to the market, so that person comes in, puts whatever price it is, settles, there's very little money. So 40% was because of that, and about 40% is because we gave agronomist support, soil testing, and doing the right thing. So that has really helped us build credibility by a separate subsidiary where we offer all these services, quality seed, quality fertilizer, access to mechanized equipment. Within the climate resilience, we've been able to put a lot of solarization, so approximately excess of 2 billion now is solar replacing those dirty fuel diesel generators and reducing, the carbon footprint. The second that we've done is, in order to create that base of empowered females within this sector, the first thing is giving them financial literacy, financial inclusion. They at least need to know what money is, what banks is, what borrowing is. So we embarked, and we have over the years covered, about more than, 200,000 total across the group in terms of imparting that education. Thirdly, we have now targeted some of our financing into specific targets around these have to be female-owned businesses. And in that, there was a lot of resistance, but they're not in the businesses. We said, go in, look, you'll find them. And now we have success stories where, somebody's husband passed away, that's an actual one, and no bank was financing. And HPL stepped in, gave her the finance, got that industry up and running, and today she runs a very successful business and she's expanded it. Smaller sector, a lady basically, husband passed away. She had, one animal, we supported it. Now she's got like 17 animals. She's selling milk. She's rented space. She's actually selling it to the retail market and making a very, very good margin in between. So I think as we educate people more and more, there wouldn't be a dichotomy of can we kill two birds with one stone. I think there was a previous question on this as well, that climate resilience is considered something different, but it all comes under sustainability. So if we are decarbonizing the footprint, if we are bringing in more efficient irrigation techniques, if we are moving orchards to drip irrigation versus flood irrigation, if we are moving the irrigation for the fields to pivots and being able to finance those kind of equipments and be able to give them on rental. The second thing is that mechanized equipment requires room. These land holdings are very small. So we've basically built these distribution centers at the heartland so that we put the mechanized equipment there. Everybody in that region can sign up, and that gives contiguous space. So if we are sowing, then the seeders have the space to run with it. When we're harvesting, the harvesters can run. You can't bring a harvester in for 2 acres of land. You need 1 day's full work, maybe 50 acres. You need that kind of space to run these equipments. So I think the whole concept of stepping out of our traditional roles and how do we look at that value chain in this person's lifestyle and start to plug the gaps. The second thing that I haven't addressed is a lot of times when it's the children's education, somebody passes away, some unexpected expense of the grower, that middleman is there to give them more money. In our case, we now have personal finance solutions. We have people that are sitting there. The next step that we want to do, which is very critical from a diversity gender piece, is we want to use these data for HPL Zarai services or agri services as we call them, where teams from, because we're a part of the Akhan group, we also have the Akhan hospitals. There is a outreach program which is, women and child health. So those data are places where those teams can go there as well and really set up camps and really start to improve the quality of health, the quality of life, for the females. The last piece there is, as we look at this climate resilience fund, that we're very fortunate that BII, with our long history, has taken a bet on us, and is one of the 2X pieces, is really now start to look at who is the head of the family. And I think in certain cases we will mandate that this particular recipient has to be the female of the family. Our culture is more of a male-dominated culture. And if you really want to break it, you have to selectively start to look at that. So I think change is never at times very easy. But if we are to make that change, I think we have to be bold. We have to have a compelling vision. And when the people see the result of that, then you get more and more people coming in saying, I want to work with you too. The second piece that we're doing is, because just like there was a talk around capital markets, banking, others. So when we start looking at the agri value chain, the second is storage. These farmers don't have place to store it. So they're going to sell at the time they've harvested, where the supply is at its peak, demand is at its minimum, the price has dropped. So setting up silos, whether they are vertical silos or granaries or whether they are flatbeds, and doing receipts, grading, doing receipts which are discountable, will give and unlock the financial resources for these farmers if they feel they don't want to sell the crop day one. So they have then 3 months, 6 months to hold that and be able to get the financing they need, and then to be able to sell it when the market is more amenable. So it also levels out the inconsistencies, the prices also stabilize, and overall there is a benefit. So I think the key is whatever value chain we look at, we need to look at it from start to finish. And I'm not saying every institution does what HPL does, but the ones that can take the whole 9 yards and say, we're going to do it end to end. The ones that can't then say, okay, I'm going to do this piece. How do I partner with 2, 3 others? And finally, even if we do all of this, it's not going to change that 90% for that to become zero, right? The final thing that we do, and which is most important, is thought leadership. In things like this, we're not in competition. I keep on telling my fellow bankers, you know, we need to collaborate and share. There is enough opportunity for all to work effectively in this space. But the key is, as more and more people we bring into the fold by sharing with them how we achieve success, that ensures that we get more and more people jumping in. A simple person is going to think, if I get more competition, after all, by commercial banks, that means I'm going to make less money. I'm not going to be able to cover 90%, even if I wanted to, you know, in 5 years' time. So let's move forward and let's take the country forward. You know, that I think has to be a collaborative effort. And one of the things the multilaterals should do is that as part of our financing, you know, please create a forum and share what you're doing with the other partners. So all your disbursing partners really need to be also sharing with the market. So there may be other multilaterals, there may be other people that can get, you know, impressed by a success story and say, you know what, I want to do a pilot too. So I think that's where I see this thing, that, you know, we have a huge opportunity here on these two lenses and continuing to bring them, you know, together so that whatever we look at, we cover both of the lenses.
Absolutely. No, thank you very much. Really insightful work that you've been doing across the value chain and really embedding the several just layers that we've talked about here in moving the dial. I think it really speaks to the intentionality that you bring to the table. And I think on that note, I do want to come to you, Tammy. Eco Enterprises Fund has been really quite intentional from start, and you've been incorporating both priorities of gender and climate change into just each of the funds that you've launched. So could you share with us some learnings, some insights that you've built over the years? What has really worked in bringing financial sort of instruments to the nexus and creating really impactful stories versus where you've seen some friction and some pushback and challenges over the years?
Yes, so thank you so much. Women in the world unite. That's what I say. Women in finance, women investors. We need to all come together to focus on these issues.
Absolutely.
So Eco Enterprises Fund has been around now for 25 years. And some of the topics that were discussed on the earlier panel, mainstreaming, scaling, natural capital, supply chains, women in supply chains, that's been what we've all been about over the last 4 portfolios now. We're now on our 4th portfolio. We have started as a proof of concept in 1998 under the umbrella of the Nature Conservancy. It was mentioned that there's a need for innovative tools within this space. We are one of the tools in the toolbox with all of the other tools that are needed to really shake up and transform the capital markets in order for the private sector activity, whether it's on the investment side or on the business side, to come together to sort of conquer the challenges that we all know at hand, whether it's climate, whether it's social, economic development for the communities, or whether it's we have a focus on biodiversity. So we came together under the umbrella of the Nature Conservancy, and we're focused on Latin America, because if you look at biodiversity globally, 5 of the top countries in the world that have the highest biodiversity that is critical to preserve, conserve, and look at those ecosystems are in Latin America. And so that's why we focus in Latin America. And if you look at where that natural resource base is, which is the heart and soul of all of our living existence, it's a natural resource base that needs to be conserved, and you have local communities that live right adjacent to it or within it. And so those local communities need various different strategies to be able to sustainably look at that resource and how are they going to get themselves out of poverty or sort of take advantage of it. And so, so we came out and emerged out of looking at and investing in companies that use natural capital, that use natural resources in a sustainable way in concert with local communities. A lot of that community leadership is women. A lot of the supplier chain is women. And so what we have done over these years is look at creating these very risk and return portfolios that could serve as illustrative models to try to get buy-in from other investors. The DFIs have been critical to provide that platform of support, but our goal is to get more private investors so that we mainstream the concept. Private investors investing directly in these small to medium-sized enterprises, or private investors that come in to our fund. And so we actually spun off from the Nature Conservancy. We invested in some of the first within the natural capital or nature-based solutions space. And so most of these companies at that time were the first organic cacao company, the first organic spice company, the first Forest Stewardship Council certified furniture processing company, a lot of firsts. And then, as you saw over time, because now it's mainstream, organic, fair trade, superfoods, you know, all of these concepts were quite new, and you needed these very interesting, creative visionaries to come in to start these businesses, and you needed to have that working partnership, that collaboration with those local communities over the long term to succeed. And those companies started replicating. They started expanding, they started replicating regionally, they started exporting, and then you see a whole sort of evolution of market development, which you see here. And so Eco Enterprises Fund has sort of grown with that ratcheting up of the overall market. We spun off, women-owned and women-led fund, the first ever in Latin America and the first ever in our space. In 2008, we launched Fund 2, we launched Fund 3, we're now in the midst of launching Fund 4. Fund 4 has a cap raise of $150 million. In each portfolio, Fund 3, for instance, we had 33 private investors with our DFI investors. In Fund 2, we had 22 investors, so you could see increasingly the interest in the type of portfolio that we put together, whether it's in agroforestry, whether it's in forestry, whether it's in agriculture, regenerative agriculture, whether it's in different types of natural ingredients. And now we're seeing some other like technology-driven companies just because of the amazing growth in this overall market. You see more private investment, but there still is sort of a reluctance of investing in emerging markets, investing in rural areas, investing in these types of companies. But because of this holistic view, including climate, because we've always taken this integrated approach that biodiversity is related to climate, which is related to social impact. And unless you address all three within these companies and have it baked into their operating philosophy and baked into their company structure, that company is not going to be successful. And some of these companies have grown from 0 to 150 million. Some of these companies, like we had one company in the Fund 3 portfolio that went from Latin America, global south to global south, expanded into Kenya and India. An amazing goal and an amazing sort of strategic vision for that. But what's so interesting is that there's now more momentum, there's more traction in the market, there's more companies that are baking in the environmental and social mandates as their asset, as their base asset within the company. And with that, then you could tackle the climate issue, you could tackle biodiversity preservation, you could look at resiliency for the local communities and for these businesses. And so, you know, we take a ground up, and I know there's a lot of initiatives top down, ground up. And when you add up where this small investment is being undertaken, these add up and aggregate all the impacts of all these companies. We're talking billions of dollars in sales. We're talking of hundreds of thousands of people, communities actually impacted. And it's amazing for us to see that women are really drivers of this whole sort of, I guess, championing this way, this new path forward. And because of that, it's really sort of heartening to see that little by little we're conquering some of the challenges at hand. Thank you.
Really interesting to see really how you've gone from strength to strength in each fund, and having demonstrable sort of progress over the years and bringing together sort of a host of really high impact themes, but also investors over the years, and looking forward to really talking to some of that a bit more. So Sandrine, thanks really for joining us in spite of the flight challenges. I really wanted to come to you from the perspective of structuring and investment vehicles that lend very much towards the sort of what investors would be attracted to invest in for this sort of dual outcome. So I know EG Capital is known for blended finance use, and maybe if you could start us off by a bit of an introduction into the EG Capital thesis, and then going into just how you've looked at your capital stack and bringing together different layers of types of instruments to be able to drive change towards both gender and climate outcomes.
Thank you for this. And let me recap on the strategy for EG Capital and then give an example of how the structure has been thought about and the ecosystem as well. So the thesis we focus on, we're private debt fund focusing on climate adaptation, gender equity. And for us, that means investing in food security, health resilience, and education technology. And we cover Eastern region in Africa, but also the SADC region with Zambia, Namibia, Botswana. So we're also a regional fund. Now, you have a lot in climate, obviously, in food security, and that still represents 60% of our mandate for Fund 1. And health resilience is somewhat less covered in adaptation story. So I'll put a little bit of a pause in there. When temperature goes up 2%, malaria, dengue fever increases. So local production of essential medicine, distribution, cold storage, emergency response to these climate shocks, and technology as well to be able to have data-enabled faster responses to some of these shocks is going to be critical. Education of medical professionals as well, emergency response professionals too, is a very interesting angle between education and health. And education technology. So we see that the green transition has a potential to create over 30 million jobs, and often emerging market countries are losing out on those jobs due to the lack of, curriculum are outdated, and so there's not enough time to build the universities. So effectively, also the technology, online education accreditation, upskilling of professionals is going to be very important also in the climate transition and the new jobs to be created. So we really sort of cut across food, health, education, and with the goal of making, enabling communities to respond. So increasing ability to respond, decreasing the threat and the exposure, and the delta in the shock effectively. So that's the intention. We came out, the thesis also came out as part of Project Drawdown back in 2018, when a team of scientists at the University of Berkeley looked at various thematics and sectors. So we can say, yeah, we know the sectors. Yes, we are going to do plant-based proteins, sustainable dairies. Those sectors and verticals are quite well established and evidence-backed. But I would say what was interesting for us is some of what the panelists have already mentioned. the fact that climate adaptation is a new field of investment. So investors come with certain perceptions of what it is, which may differ from reality, because in reality, we do see commercial scalable investments. And it's not just a company, just to bust the myth. It's not just that we have a company that's a purely climate adaptation company. Yes, that exists. We have plant-based protein producers, but it is also maybe about the dairy producer and how that dairy producer can make sustainable protein, and are the cow eating climate resilient crops. So it is also about investing in climate adaptation strategies for all businesses. And I want to make that point of urgency and to say this is also investments as business as usual, because all businesses have to also adapt to the climate change. We saw some of our businesses in Zambia being impacted by very extreme and severe droughts last year. The hydropower of the country was really impacted, and these companies, food processing companies that communities rely on for their daily essential staples, were not able to produce for something like 18 to 20 hours every day. So these type of extreme shocks have to be mitigated. And it is the case of sometimes installing independent solar generation and making these type of investments also available. And so that's really what we focus on our thesis. So what is going to make community more resilient, reducing dependency on import. And how we've gone about the blended finance structure is really to mobilize private sector capital. And for us, that includes family offices, Europe, US, Africa as well, because intra-Africa regional trade is also a very important component of the mandate. And as well as African institutional investors. So African pension funds, sovereign wealth funds, and to make sure that actually they are part of the story, the returns, and they're also creating real GDP growth by investing in these climate adaptation strategies. So we also leverage the BII and BCG report, which really helped us understand the typology and how do we fit into the ecosystem when it comes to blended finance. So we're clearly an impact debt fund, and we've structured it, we've tried to keep it simple with a senior tranche and a junior tranche. And in the senior tranche, having institutional impact investors, including DFIs, and then in the new junior tranche, having catalytic investors. And these catalytic investors not only provide a loss protection, and it may be very rare that a fund manager loses at the portfolio level across 15 businesses. But what we find interesting is that this kind of protection layer adds to the psychology of investors entering into a new investment field. Everyone likes to have a safety net. But on the other side, what we also demanded from our catalytic investors is a cap on the returns at the hurdle rate. So effectively, the blended finance also provides an uplift on the returns. And the reason being is if we want to do climate adaptation, we're looking at our mandate is 80% least developed countries in Africa. We will face currency risk, idiosyncratic risk, in addition to funding these strategies. And it really adds an additional pocket of flexibility when you know that you really want to have the climate adaptation impact in these communities that are actually needed, right? So that's the innovation in terms of the blended finance structure that we've put together for this fund. And the debt element, I would say, is an interesting one. Equity in Africa is not always available. Many businesses are still family-owned businesses. Banks often find there's a concentration of investing in government bonds. So when you can make 20% risk-free, why do you lend at risk at 10% to a business? Is often, the lack of sophistication sometimes that banks can offer is a problem on the continent still, to go beyond just short-term receivable finance to really funding growth. So we see that in the rest of the world, private debt is growing, and only 0.3% is reaching Africa. So absolutely, there's a huge demand for financing growth using the debt structures. It's also very beneficial for our pension funds and our local pension funds who have cash flows and liquidity from our investments. But we see it also as an ecosystem play. So we like to work together with other co-investors and really build the balance sheet and the capital stack of our investee, similar to Nasser, with the goal of actually reducing the cost of capital for our investees. Those investees that want to be sustainable, want to invest in those climate adaptation strategies, value addition, shouldn't be paying what they're paying in Zambia at the moment, which is 30% in the local currency. So we work with other co-investors to look at working capital, to look at EXIM financing. When they need equipment from other countries, can they source that at 3 to 4%? We look at senior debt, and we take the mezzanine tranche. So we really always work with co-investors and build the capital stack that companies in Canada, Europe, US have access to. So I'll stop here. That's how we've built, instrument and structure.
Thank you very much, Sandrine. I know we're in our sort of final two or so minutes. I do want to ask a pressing question from the panelists, and I really welcome some views from all of you. I think it's a fast-changing world that we are in at the moment. We're seeing a lot of development around AI and digital tools. We're seeing really exponential impact of climate risks across markets. We're also seeing, the political rhetoric around maybe some countries pulling back their commitment around climate change and maybe even gender equity. It'd be really good to get a sense of how your businesses are adapting or any sort of market practices that you're seeing as a good example for our audience to take away.
30-second soundbite.
Yes.
I think from my perspective, there's a couple of things. The strategic direction is there because it's the right thing to do. So governments come, governments go, views change, but ultimately, this is something which I at least see in many countries, the youth now wants it. It's not about the governments, it's about the youngsters which are coming up. They question what kind of a world is being left. We throw valuable metals and others in garbage, and we don't recycle it. We assemble for cheaper cost of delivery, but we don't disassemble. So I think this was a natural way to come in. Equal rights is something everybody wants to be equal. I don't want to be discriminated. You won't want to be discriminated. So why shouldn't there be equal rights? So I think there are certain things which are the right things, and those will continue to be the right things in the long run. On digitization, we have to stay with it because it really makes the cost of delivery, the cost of supervision, those use cases which come in can, for any project, be able to allow you to do it at a lower cost, and that could make it economically viable.
Final thoughts from Ilya?
Yeah, maybe I'd like to chime in on specifically the reduction of some of the aid programs that we've seen across the board. So us as an organization, of course, we were running a couple of projects with USAID until, obviously, the entire story happened. So what we did as a team within ETG group is essentially we picked up where the project kind of stayed. So we essentially started paying for the teams and start trying to continue the project and try to basically recycle some of these interventions as part of our own programs. So what I would like to say is I think where aid is gone, then probably the role of commercial organizations such as ourselves is to step in and to try and do it, right? And I think at the end of the day, commercial world is not always bad. I mean, you always have operators that are less responsible than others, unfortunately. But generally speaking, to have a commercial operator step into some of these programs may not necessarily be a bad thing either. Because I can tell you, I mean, we are not driving fancy, shiny Land Cruisers around our projects, as opposed to some of these other programs. So we try to run a tight shop. And yeah, I think we really have a role to play to collectively pick up the slack where it left. And it may end up being, to a certain extent, better, because what we're trying to do is to create virtuous systems, right, that perpetuate themselves. So what you want to do is to get to that type of development, and not necessarily, you know, be running 2-3 year programs that end up and there's nothing left, and you sort of create the wrong perception from the local communities as well, that, you know, somebody's going to come and do it for me, as opposed to if we pick up the slack and it's part of a commercial program, then what we're trying to do is to basically provide people with the tools to improve their lives, to get out of poverty, and we are having the impact that was intended by some of these other programs.
Absolutely. No, thank you very much. I think the recurring messages are very clear. It's an ecosystem, and it takes a lot of parties to come together to move the dial. It's really quite impressive to see the transformational changes that come from the little sort of adjustments in governance, adjustments in strategies. And we really thank our panelists, who have been phenomenal. Thank you very much for joining us.
I think thank you to the audience waiting patiently. Right? So